Hello, hello. Hey,
How's
man.
it going?
Good. How are you?
Good, good. Chilling. Kind of a slow day at work, so it's a good day.
Yeah. Amazing. How's it? Is it cold?
It's like mid 50s, so it's not bad. It's just raining. So
Okay. Okay. Yeah.
congrats, the hookup with the Trump's company for the auto trading. That's fucking
Yeah.
great news, dude.
Yeah, man. I'm stoked. I'm stoked. Thank you. And yeah, it looks great. I've been doing. I don't know. In the past 3 days, I ran through like 1,000 tests and back tests and everything for the auto trading for. Because obviously, like obviously we have it auto trading ourselves, but we have it integrated in the entire system, right? So unless
Mm.
I load the entire fucking system onto another server, it's not going to auto trade for someone else. So we had to, change it and implement it, and we did it pretty elegantly, I think, and it works. So that's great.
Yeah, that's huge. That's big steps.
Yeah, for sure, for
That's
sure.
awesome.
Yeah, especially the performance being so consistent. Looking at it more. Like honestly, sometimes I don't even look at it because like sometimes it's just in the background. But it's yeah, it's really good. It feels good for sure.
Yeah, it's just they're making money and that's it. You don't have to worry about it.
Yeah, man. Especially now, like right now, like days like these, or like multiple days like these, you have like once a couple months, because like um when you look at the equity curve, it's like you have a huge pump, and then you're slower, and then you have a huge pump, then you're slower. This is one of them. Like this, we're literally talking about well, like close to 140% over the last like 5 days or 6 days. So
Insane, insane.
solid. Yeah.
So how do we get in? You said there's
We
to
actually
schedule
have
the call.
it.
Do I have to?
Yeah, we actually have it pretty much ready to go. Like, there's not much. The question is what exchange you can trade it on. I think that Moonwalk sent in a a list of exchanges. I think it was into Telegram that are supported right now, just because of the partnership that we have. But anything else, we can like anything that has an API within, we can integrate as well. It's just gonna take like an extra 2 days or something like that. For like
Yeah.
it's probably just gonna be me doing it because I know I'll do it the fastest. So um, we'll just integrate it on any exchange really.
Yeah, that's sick. Well, yeah. I mean, I have the Binance to Poland set up, so
Right,
it make it much
perfect.
easier.
Yeah, Binance is seamless. Binance literally, you set up an API key, set up 3 commas, the software, send me the key, the bot key that you have, and we'll set you up, and you'll be trading. You will set up the amount that you want to trade with on your end on 3 commas, and it's just gonna
Mhm.
take in our signals and trade it.
So now, for that, so let's say I start with I don't know, let's say like 5 grand. Um, so what would you recommend to set the price for trading though? Like so it doesn't get there's not much risk, I guess.
Yeah.
You
So
know?
so what I would do is I would like obviously like let's say you trade the QC index, right, which is 5 strategies. Um,
Mhm.
you can take say you can take like 80% of your account and split it 5 ways. And then each of those strategies is trading on itself, and each of those strategies has a maximum loss of 20%. So your overall account is 1/5 of 20%, so 4%, right? So
Okay.
um, so Basically, the max loss that you have per strategy can be 4%, and you can manage that by, trading less of your account or more of your account. And then there's basically nothing else that you need to do. It's going to enter and exit by itself, obviously. And yeah, that's basically it. And that is the standard. And then there's more aggressive ways of doing that too, with higher leverage, but that involves, a bit of a management system as well. You can just run it on 2x by itself, and it's still going to work. The drawdowns are going to be larger, but it's exponential profits. I would not do that on your main account though. Like, what you can do is have your main account trading on spot, because that is the most consistent way of doing that. And then you can have like a fun account on a larger leverage, and those are just those moves are just huge. But it's like the volatility is too much to for me to recommend it to anyone to trade. So yeah, and then I mentioned it on the call before. Like I was playing around with like super high leverage situations where it's like 20x per trade, and basically like what that, like you go one layer higher, right? So like you don't look at your accounts as an account, you look at your account as the overall structure, as an umbrella above all of them, and then you just put in small amounts of money into your account, like account quote unquote, right, into the isolated margins, and those either win big or get liquidated. They just reload small amounts into it. A situation like that, but that's something for later. If you want to try it out.
Yeah.
But yeah, I would say best way, have it auto trading, have it without leverage, set it up, and yeah, then just watch a trade basically. And then you can still trade along the way, but like basically it's like you're hedging against your trading, right? Because like whatever happens, you have the dashboards running, and when you look at the performance, I'm extracting all the data now, so I can send you like the trade by trade since I don't know how many years. So it's like thousands of trades you can look through if you want. But when you look at the month by month analysis, which I sent you in the announcements, I sent in the announcements. Then like what was the worst month on the spot was, I think, 19%. I think that, yeah, 19% right there. So that's something similar to expect, of like the ratio between positive and negative months and the size of wins and losses in each month. And then when you look at the 2x, then you can literally see the difference and how much bigger those, first of all, the wins are, sure, but also the losses. And keep in mind that these percentages, they compound, right? So like, say month 1 you made 3.6%, month 2 you made 4%, but you made the 4% off of 103.65%, right? So then you have 20% month, 22% month, 50% month, and then obviously that compounds quickly. So that's something to keep in mind. And other than that, pretty simple. Pretty simple setup. I think it's very, very simple right now. And it's also like, the trading is on your side. You're essentially just subscribing to the signal. So you have full control over how much you trade with, when you turn it on and off and stuff like that, which is also very good, I think, for the client side. So, yeah.
Okay, so now let's get back to the learning portion of manual trading.
Yeah.
So I've been doing the higher time frames. So when do you exit the trade? Like when the 30-minute or 1 hour let's say, makes the full, move, and then you wait for it to reload, and then let's say enter again to go down with the higher time frames, or you exit at 15 minutes.
So it depends what time frames you're trading. If you're trading the higher time frames, then it's a mix of the overall time frames again. So what I mean by that is that when Bitcoin just dumped quite a bit, I can see. So what this means is that when you, depending on the trade, so let's say you enter on the 3-4 aligned or something like that, or let's say 3-4 bias, 15-30 1 hour are aligned, you trade, and then let's say the 3 and 4 hour are bottoming out or like close to the bottom, and your 1 and 2 hour are bottomed out, and your 15 and 30 minute are going up already, then you can pretty clearly anticipate that they're one by one going to start moving up. So that's your exit.
Yeah.
So basically it's the exact opposite of an entry. So that's one thing. However, what I also do is when I trade, I set up the trade, I set up my levels, and that's it. And then I don't really look at the trade. I want that trade to basically play out without me, because I just don't like staring at it, So I want to have it. I want to have a trade set up, so no matter what happens, it's managed somehow. There's a stop loss. There's multiple take profit levels, and then I check back in every once in a while. But I don't want to have the responsibility of needing to do an action, because I don't want to do that, So what I do is I set the trade up. I set my 3 take profit levels, and then after the 3 take profit levels, let's say, if all 3 hit, then there's still like 10% or something that can just run. I have my stop loss with my layer orders, and that's it. And then I just check back in every once in a while. So the exits, quote unquote, are the take profit levels, So if I hit all 3 to take profit levels, then, I have made a deal before. I've set up the trade. I've said if I hit these 3 take profit levels, that's a good deal for me compared to the risk that I take, and that's it. And everything above that is just bonus. So like I can just check back 3 hours later, and I see that it works well. Okay, great. Now what I do is I let it run, or I take extra profit or something like that. But the core management is there. So even if you mess up with your exit timing, it's still fine because you hit some levels already. Does that make sense?
Yeah. So I think I'm looking too far out, because so I've been trading the high, getting the 2, 3, 4 hour as a bias, and then 15-31 as the trade. So then when, the 1 hour would make a full run, I would either take profit or exit, wait for the bounce back, and then re-enter again and go with the bias. Because I've noticed that if I just let it run, let's say at the 4 hour, and, when the 4 hour makes a full up and down movement, it ranges up and down a lot, and it seems like I'm missing out on the trade. But also, I'm most likely setting up the range too far out, like I'm expecting too much, so the gains are too small because my take profit and stop loss are way too big.
Yeah. Okay, so I see. So bias plus re-entry makes sense. If your take profit and stop loss are too far out, okay, so it depends, because what you can do is have your 1 hour, like what you're trying to do is still catch the bigger move, right? But the bigger move happens every once in a while, and you using the lower time frames to align and catch it. But when there's when there's a 3 and 4 hour alignment, it could take like 3 cycles on the 30 minute or 1 hour for the move to finally happen. So you set the trade up, um, and depending on what your main time frame is that you're looking at, if we're doing it the way we set right now, then it's around the 1 hour is a good time frame to look at, because your 3 and 4 are your bias. So 1 and 2 is good to look at. In that case, you want to see, okay, where can we go? Where can we go when the 3 and 4 get into the move? So like that's your best case scenario. And then what's your worst case scenario with your take profit level? So like what happens if the 1 hour doesn't have enough juice and starts turning back up at the bottom, bottoms out and turns back up? Where is that? Usually bottom of the range or something like that. So that's your TP1, bottom of the range or a little above the bottom of the range. TP2 is somewhere in between. TP3 is where the 3 and 4 would drag the price. So like you can have take profits further out, but literally depending on how much the price is moving and so on, you also want take profits closer up in case scenario one. Let's say scenario one is 3 and 4 top out and just do the full move to the downside, and that's a big move. Scenario two is it does not happen. The 1 hour bottoms out, and then you still have some chop or something like that. You don't have the full move, so you need to be able to take profits or make profits in both situations, in both scenarios. Do you know what I mean?
Yeah. Okay. That clears it up a bit. So I have to pretty much, when I start up the trade, I should be setting it up on 1 hour time frame, or looking at it at 1 hour time frame. So then my stop loss and take profit are not that huge.
Yeah. If you say that you take profit and stop loss are huge, then yeah, look at the 1 hour. Really, the way I do it is like I'm okay looking at the 3 and 4 hour. Like right now would be a good situation actually, because like the 3-4 topped out pretty well, and like they weren't caught in the move as before. They topped out right now, and there's a nice top and bottom. There's a nice curvature in that top on a 3 and 4 hour, so that would be a good short. And when you look at the 4 hour, like your TP1 would have been hit, by the way, which is like 63.4 or something like that, which is the top of the previous range. And then you have like the middle of the range, bottom of the range, and then you have your best case scenario of like the previous range at like 52 or something like that. So so that's when I look at the 3 and 4 hour. I think I have a good rule of thumb for you. So whichever is topped out or bottomed out, whichever just has the right curvature to top out or bottom out, whichever time frame, that's the time frame you're trading, right? So if the 3 and 4 hour are in the move, like in the middle, just going your way, it's just a bias, and your 1 hour just topped out, you're scripting like you're charting everything on the 1 hour, right? So your take profits and stop loss are tighter. If it is like right now, your 3 and 4 hour are topped out, right? Topped out, and clearly there's a clear curvature, then you can script it on a 4 hour, because that is the move that you're trading, and your bias is on the higher time frames now, on the 6 and 8. It's wherever the top out and the bottom out and the curvature and the start of the move happens. That's basically the time frame that you're trading. Does that make sense?
I'll practice with that, because I had an issue, trading the dashboards, because my stop loss was too small and I kept getting stopped out. So now I extended it bigger, but now it seems like it's too big.
Yeah. Well, so the dashboards. So that's the thing, right? Because you're trading multiple trades at the same, or like multiple strategies at the same time, the maximum, like you only trade with 20% of your account in the first place. So the maximum, so that's the thing. Basically you don't have a stop loss on the dashboards. There's just a max stop loss of 20%, like a hard stop loss of 20%, which is 4% of your entire account because you're trading 5 strategies. So the point is that the strategy is traded without any intervention. And sometimes you do get a 20% loss, which is a 4% loss of your account. Sometimes, doesn't happen very often, but it does. And like that's part of the strategy. That's like a downside that we tolerate, because the upside is that you don't have any situations, or basically don't have any situations where your stop loss is too tight. So your stop loss can be broader, and like it's very important that you don't take this out of context, right? Your stop loss can be broader if you have a different risk management method that's in place, which in our case is because we divide the profits and the losses of any strategy by 5 by default, and then by default we also have negatively correlated strategies with it, right? So it's basically a higher level situation, because like the more you look at strategies and so on, the more you understand how a stop loss is not a very good risk management method. It's just not, and it does hurt your performance quite a bit. It's just a very simple way of doing it, and also, it's a very simple way of making people lose, because there's literally a price level, and if that price level hits, they automatically lose, which is crazy when you think about that. So like, if I have the power to move the price, I can do it all day and make money, which people do. So yeah, the thing is that the stop loss on the dashboards needs to be broader. If you're not comfortable with the loss that stop loss would trigger, then you are trading with too much. Then you're overextended, because it should be 4% of your account. Like that's the maximum it can ever be. And if that 4% of your account is too much, then you can just use less of your account. If you use 50% of your account, then you only lose 2% of your account. When a hard stop loss of 20% happens, which is something that is not something very common to happen, right? So that's essentially your worst case scenario, is a 4% loss per strategy. So and if every strategy would hit a stop loss at the same time, then your max loss of your entire account would be 20%. So the risk management is there, which by the way never happened in the past. Like over thousands of trades in the past 4 years, it did not happen. But even if it did, the loss is 20%. So you see how the risk management is there. It's just the numbers. Yeah, when you add the numbers up, that's that's just your risk. So like any possibility that you have, you covered just because of the numbers, just because of math. But that goes without saying. Like if you overextend on a strategy, well, then you overextend on a strategy, then you can hurt yourself, right? The important part is that they're even, like the allocations are evenly spread out, and you're just trading it, and then you literally just banking on the fact that you're trading a market that has core fundamental principles, which basically any market has, right? So that's the benefit of it, really. That's the point of it. So with the stop losses, it's important to understand when to use it and how to use it. When we use the stock strategy and we're manually trading, then we're using the stop loss not to not lose more money. We use the stop loss as a level where we say, okay, our theory was wrong. That's why the stop loss is there. The risk management aspect of it is just a side effect, which we use, but it's a side effect. The point is that we are using that stop loss when we say, okay, well, we just broke out. We are in a trend. This does not make sense anymore for us to trade. So and it's a hard stop loss, and it's easier to use other stop losses and other exits too. So yeah, and that's also the thing with the strategies or the dashboards, because they have their entry conditions and they have their exit conditions, right? And the exit condition is like literally made to exit at a time when the market does not, or when it looks like the market does not have, we don't have the edge on the market anymore that we're supposed to have. And as long as that rule, or as long as that situation still looks like we have the edge, it does not matter what the market does, we still want to stay in, right? The reason there is a hard stop loss in the first place is simply because there has to be one, because you need to say, okay, if worst comes to worst, this is a fixed number that I will lose and not more. That's why it's there. That's the point why it's there, But it really is the last resort. And I'll send you over the trades, and like you'll see what trades, like how many, like how often a stop loss happens and so on and so forth. You'll get a feel for it, but it's usually not that often. And so yeah, so for the dashboards, it's the bot trading. So we want to let the bot trade, and the way we manage risk is not by forcing a price or like exiting and entering and messing with the strategy or messing with the bot. The way we do it is by trading an amount that we're okay with, and then trading other strategies that are negatively correlated, that help each other out. So that's your risk management right there. You're using 1/5 of your account per strategy, so 4% risk max. And then worst comes to worst, all of the strategies at the same time hit the stop loss, right? It's 20% of your account, which is, if you compare it to, some people trading in our Discord, that's like a light day for them, So, so that's the risk management situation for both, the stock strategy and the dashboards. Does that make sense?
So it comes down to, so pretty much the dashboards and the stack strategy has actually a different setup for stop loss. Did I get that right?
Yes, because one you trade manually and the other one you don't. And because you don't trade it manually, you can look at more data. If you do trade it manually, you can, it's much harder to look at more data.
Yeah.
So basically, the stock strategy, or at least the way I trade a stock strategy, is, okay, I see an alignment, I see a bias of the market. I see, based on the alignment of the stochastics, this is very likely where the price is going to go. I set up my trade, and I'm either right or wrong, and then, there's layers to it. So, even if I'm not fully right, I still hit a couple of TP levels and so on and so forth. But, that's the idea of it. And then I learn from the trade, and I just go on to the next trade. And the bot is on a much more dynamic basis. There's 5 things going on at the same time, or 9 things, depending on what bundle you're trading. And there's dynamic stop losses and so on and so forth, So too much for one brain to manage in real time. But because it's a bot, there's the, it has the possibility to do that. Whereas when you're manually trading, you need to compromise on things for the benefit of clarity. which is important, because if you don't have that clarity, then it's just going to get all messed up, and you don't have the structure, and structure is more important than being completely optimal with your performance when you're live trading, because when you're manually trading, because like you're inefficient anyways, that's fine, but really the name of the game is to survive and have a playbook that you can go by that is good in general. So that's why.
Yeah, that makes sense. So now I get it, because I switched the whole thing when I started, when I tried trading the dashboards, and that wasn't working out. So then I applied, the larger stop loss on regular manual trading, and now that makes sense why it's not really working out well for stack strategy.
Yeah.
So
Yeah.
I'll adjust that.
Yeah. Yeah, good question, by the way. Yeah, there are two separate stop loss theories behind them, because they're two different strategies, and there's two different theories behind the way of trading, even.
Yeah, I mean, since we had the last call, when I switched the whole approach and the strategy, it's been good. It's been profitable. Yesterday I fucked up and I kept moving the stop loss because I thought it was gonna, turn around, but it never did. So they ended up, losing most of the gains.
Yeah.
But it looks like it's coming back today slowly. So I'll just have to adjust the stop loss again. But it's definitely it's a more calm and more reliable way of trading this way instead of like scalping for me.
Yeah, absolutely. Like even now, like you like there's a lot of calculations going on in your head, and this is a trade that takes multiple days to play out. So like, how could you do that to the same extent, on trades that happen, a couple times a day? It's you lose out on a lot of capacity, and so that's that. And that's also what you said. That's also why I recommend to, and I know it's scary now that you need to grow into it, but that's why I also recommend to set the trade and be like, okay, that's it, because like if you weren't there looking at it, it would just hit your stop loss the first time, right? And you wouldn't be underwater for a couple days, praying that the price goes back, right? So like I'm telling you, you're better off setting up the trade, being completely clear about what the trade is, what you have to gain, what you have to risk. Say, okay, this is the exact trade that I'm taking, this is the exact deal that I'm taking, and that's it. Then you don't change the deal. The moment you start changing the deal, like I have only see that work out poorly. Like, yes, there are situations where it magically happens and you make a couple 100% because of it, but it's not a reliable way. It's like playing lotto or something. It does not make sense. And more often than not, I have seen in front of my eyes, I have right now multiple situations of good traders doing exactly this and changing the trade, changing the deal in the middle of the trade and getting burnt. And it just happens all the time because it's supposed to happen, because the market is literally designed to do that. So by saying, okay, this is my setup right now, I am okay with this trade. I don't care what happens afterward. Like, I'm okay with this trade. I either lose, I either win. I know my stats. I'm okay with this. And I leave. And now the market can do whatever the fuck it wants, but it's not going to scare me because I'm not here. So I don't see it, So you have the edge over the market because there are no emotional triggers to mess with you because you're not there. And your best case scenario and your worst case scenario, and you're okay with that, right? I know that I'm right 60% of the time. I'm setting up a trade with a 3 risk to reward. If I win, great. If I lose, great. I'll just do the next trade. 60% win rate, 3x risk to reward. I don't care. My job is to find the right setup that has those 2 stats, and then my job is done. It does not matter anymore. I can look at other trades. I can do whatever I want. My job here is done. I will come back later to see the results. But I'm not needed. I'm not wanted at that point, So looking at it this way will save you a lot of mental stress. And I promise you, if I put 2 people next to each other trading the same trades, one of them leaving and one of them staying stuck on the screen, the one leaving will outperform the other one every single time.
So now, when you hit first TP, do you go back in and move the stop loss to entry, or do you just let it go until it's done? Because a lot of the times when I would trade it, I would hit, like, let's say first TP, and then it would turn around and then go into the negative or hit the stop loss.
Yeah, often.
So then
often, but that is also predefined before, right? So I know. So like, let's say I set up the trade, and I will do what you just said, right? So this is actually a great scenario. What I have in front of me right now. Can you, if I share my screen, can you see it?
Yep.
Okay, let me just do that real quick so you can see what I'm looking at. Can you see me?
Yep, I see it.
Cool. So this is Bitcoin, right? So let's say I'm setting up this trade right here. We're topped out at 3 and 4 hour. I'm gonna set up my trade. I'll put a short right here. My TP levels are right here. TP1. Right here is TP1. Here's gonna be TP2, and then probably gonna do TP3 somewhere here. Maybe 1 in the middle or something like that. Just in case, So I'm like, okay, well, we touched this. We're in a bull market, first of all. So like, okay, well, we need to be aware of that. So I'd be like, okay, this is a situation that if I hit this level, I probably want to set my stop loss to break even, because this is a big distance. This is a distance of 6.6%, almost 7%. So it's pretty deep in the profits already. And the distance of the price going all the way back up clearly invalidates my trade anyways, especially in the bull run. So I'm like, okay, if I hit TP1, I am going to put my stop loss to break even. So what I do is I put an alert to this line. If I cross this line, it's going to alert me. I have my app on my phone. I'm going to see it. And only then I check back, on a trade. Or, like, that's the way I have it. It's like I just have a script that does it for me. But like manually, this is how you would do it.
Yeah, alert. That's what I've been missing. That's why I keep looking at it to see where the price is. And then if I see it go the other way, I freak out and move it. So if I set up the alerts, I won't have to look at it until it actually does it.
Yep. Set up your alerts. Download your app on your phone, and then you're gonna get a app notification, so you're not gonna miss it. And that's it. Go on about your day.
I like that. I think that's what I was missing to so I can keep looking at it.
Yep.
Perfect. That's a lot of info to adjust for the next couple of days.
Yeah, absolutely, man. I mean, yeah, but you're progressing pretty well, like very well. You're looking at the higher time frames. The questions that you're asking are the right questions to ask. It means that you're progressing, and yeah, also the fact that you were profitable along the way, great. The fact that you lost a little bit of your profits because of moving the stop loss, also great because it's a great confirmation for you that what I'm saying might be the thing to do. And yeah, I think it's great. So I think if you continue like this, you'll be pretty good.
So now to enter the bull run, I should just wait for. Wala ba saga? Totoo. So
For
zaraz będę. Tam na tył, masz plan. To nie. So now because I haven't been trading, much on the live account
right.
since I'm not comfortable with it yet. To still enter the bull run, I should probably wait for bigger drops or when it hits. So now in the bull run, it's not gonna have much of ranging, correct?
Yeah.
I should just wait for the time frames to be mostly bottomed to re-enter or like to enter into a bull run, let's say.
Yes. So as long as you're overall biased, which you biased to the upside, which you are, you're basically just looking for indications of long entries, and more often than not, you will be rewarded for them. Much more than you would be rewarded for shorts, by definition, right? So like whenever you have a situation of like the 3 and 4 bottoming out together, it's like the perfect time to enter, right? Especially because it's so hard for the stochastics to bottom out when you have such a big volatile move, because they will mostly be stuck to the upside, so like bottom out, like doesn't even have to bottom out, just be at the middle and turn around is already, and you're as a bias, and then your lower time frames are aligned, it's going to be easier to long. So longs are going to be much easier to do than shorts. And even now, like let's just take a look, 15-30 minute, right? Okay, so we're just bottoming out on the 15-30. The 1 hour is kind of ranging around, so kind of want to see what happens there. If we have some confirmation there, then we might we might see some more upside. And then also understanding how it works. So basically right now, the moves to the upside are basically retail money, new retail money flowing into the market, right? So most institutions, most institutional traders are already positioned since like 15, 20K. So what they're doing now is they are, whenever there's a big move, there's going to be a wave of people taking their profits. That's your retracement. And then you have another big move. And basically that's how it works. It's people that are already positioned taking out their profits, and new people just aping in without thinking. So,
Yeah.
So with that dynamic, you need to be aware, okay, have we been pushing up for a long time? There might be, a profit-taking situation here. So which would also be a great time to, re-enter, just similar situation than here. And the more also true is, the more you scale out of it, the higher perspective you look at, the better. Basically, pretty much till 2025, if all you do is buy, you'll be okay. So if you don't hurt yourself with overtrading, then you should be okay. So that's important to also keep in mind.
Now, since it's pretty much gonna be longing all the time, you just keep the same trade going, like moving the take profit higher and then re-entering lower, or do you actually finish the trade and then re-enter again from scratch?
It depends on your positioning. So like when we hold Bitcoin as part of like our profit wallet or part of our investments, like low risk investments, you just hold Bitcoin. So low risk, quote unquote. But in those situations, obviously, that is just we just keep it. And then when we have a day trading or swing trading account, then we enter and exit both, like the full amount, especially when you want to grow and you're compounding and stuff like that. So so really, to answer your question, when you have let's say we're longing the entire way and now we get a short signal, right? So okay, let's say I will short this right now, which is also more risky, but let's just say I short it, and I keep taking profits, and I'm still in. I take profits, and then at the time when I get a long signal, well, at that time obviously I exit fully and I switch to long. So up until the opposite signal, you have playroom to do what you want with it. If there's a clear move against you, even if you don't have a long signal, that's a full exit. But as long as the price is creeping to the downside, you can still keep something in. So the way I do it is, again, I like set up my trade. Probably like 10% of my count would have stayed in if I hit all my TP levels, or 5%. And that one's just gonna run, and I will keep it. And then if I hit another huge significant level, I can take some of that, and take some of that. What I like to do is I like to always keep some amount until the point when I'm clear that it's gonna be the opposite way.
Okay, makes sense. Perfect.
Yeah.
So when you have a chance, send me, the stuff I have to set up for the auto trader whenever it's ready, and I'll probably just start with that for now until I do more paper trading with the adjustment from today's call.
Yep.
And see how that goes.
Yeah.
Before I start putting my money into it.
Yeah. Sounds
on
good.
my own.
Sounds good, man. Yeah, definitely. And I'll send it over to you. For Binance, there's no setup. There's people that want it on like MetaTrader and stuff, which is more of a custom implementation. But for Binance, it's no problem. It's very quick to set up, and basically on our end, every single time we set it up, we have a separate instance for every person, because the bots need to run separately. So we make sure that nothing gets overloaded and everything is okay, obviously. So we have like a server cost there of like a couple hundred, like $300 almost per person, plus setup fees. And so we're gonna sell that for like $500 or $1,000 or 15 grand, depending on who wants it and what they want to do with it. But I mean, we're not gonna do that with you, your Orca and stuff like that. But just so you know, there is like a running cost that we have of like $300 or something like that to set it up. I think it's like $290.
I can cover that. Whatever is needed to get it going.
Right. Yeah. Yeah, for sure, man. Cool. So what you need to do is go onto Binance, and no, actually, sorry. What you need to do is watch the video that I will send you. That is an onboarding video, and it will explain everything. But basically, go to 3 commas, make an account. They have a free trial, and then it's $3 a month, so it's worth it. And there you will create a bot, the same way that I will send you the video how to do that. And then you're gonna send me the bot key, and we'll set it up for you. You don't even have to send us your Binance API. It's just gonna explain it there how to do it, because you need to connect it to your 3 commas, and then you'll be good to go. And then we can literally onboard you today.
I'm still at work. I'll probably be sleeping by the time I do it, unless it's slow enough at work.
Yeah, no worries. We're in no rush, but we'll be ready, and whenever you're set up, then you'll have it. You can start it, you can play around with it, and you can trade it, whatever you want to do. And I'll be around to be there for you.
That's awesome. When you flying back to Bali?
Probably on the 14th. So what, 9 days from now?
Oh, okay. Sounds good. Yeah, we're probably gonna visit you guys in September. I was talking to Veronica a couple days ago. We're planning on doing that. It's like it's cheaper to go to Bali for 2 weeks than to like Puerto Rico for 5 days.
Yeah, yeah,
It's crazy.
yeah.
Why
It's
we
crazy,
saw the
man.
prices.
Yeah, it's amazing. I love it there because then I don't overspend.
Yeah.
Like I'm
No, it's
traumatized.
like
I'm traumatized from my time in LA. You know, this
yeah, I'm sure.
yeah, much better. And yeah, it's great. It's a nice place. It's very like peaceful. You can work. You can sip on a coconut. You can do whatever. And yeah,
Yeah,
very
that's gonna be our next trip. We'll
yeah,
we'll go visit you guys.
for sure. I'd love to have you there.
All right, dude. Sounds good. I'll be going back to work, and I'll keep you posted on the progress when I have it signed up on the 3 commas and
Perfect.
stuff like that.
Sounds good, man. All right.
All right, man. Thanks for the call.
All right. Thank you. Bye bye.
Nice to see you.